All right, good morning. It's Tuesday, November 18th, pre-market. Look, the market is under some serious pressure, and today's entire session is going to hinge on one single catalyst. Here's the data-driven plan.
Okay, let's get right into it because the tape is stretched to what feels like a breaking point. We have some deeply conflicting signals setting up what could be a massive volatility event. So the big question today is, which side gives first?
So 4. That's the number of down days in a row for the S&P 500. This is actually its longest losing streak since August, and it confirms a really clear shift in momentum and just persistent selling pressure all week.
And the message from corporate insiders? It's pretty stark. We are looking at an unprecedented insider sell-to-buy ratio of 25-1. I mean, that is a significant bearish signal. It suggests that the people with the most information are cashing in their chips. And this is the big one. Technically speaking, for the first time in 6 months, the S&P has actually closed below its 50-day moving average. Now, this isn't just some minor dip, it's a confirmed break of a key institutional support level. And if you follow the money, it tells the same story. Over the last month, capital has been pouring out of tech and into more defensive sectors like healthcare and oil services. This is textbook risk-off rotation. It shows institutions are repositioning for a weaker market. So, with all this bearish data piling up, the market is coiled like a spring, and it is waiting for a single event. Just one report that will either validate this entire bearish setup or trigger a massive reversal. And of course, that catalyst is Nvidia's earnings, due out after the close today. But let's be clear, this is way more than just one company's report. This is the market's referendum on the entire AI narrative and the sky-high valuations that have come with it. So how big of a deal is this? Well, the options market is baking in a huge move, somewhere between 8 and 12% for Nvidia after the report. That quantifies the enormous expectation and, the volatility risk ahead. The entire tech sector is going to move with it. Okay, let's talk volatility. The VIX has spiked from the low 20s to over 25. A sustained close above this 25 level is a known trigger for dealers to start hedging aggressively, and that can trigger what we call waterfall selling, just a rapid, cascading decline. So for today's session, the lines are drawn in the sand for the S&P 500 ETF. Resistance is sitting up at 665. The real line in the sand for support is that recent low around 660. A break below that level really opens the door to a much larger move down. Okay, let's drill down into some individual names. These are the critical levels you need to watch. For Nvidia, support is in that 176 to 180 zone. For AMD, it's 225, and for Tesla, you're looking at 394. These are the levels that absolutely have to hold to prevent a broader technical breakdown in tech. And one last warning before we get into the game plan. Nvidia has a history of violent post-earnings reversals. The initial move is very often a fake out. You have to be disciplined here. Do not chase that first print. Before we outline the specific scenarios, here is our standard educational disclaimer. This content is for educational purposes only. It aggregates public sources to help you stay informed and improve your own decision-making. Do your own research. This is not financial advice. And hey, just a quick heads up, we've launched a new weekly market update playlist. If these briefings are helping you, go ahead and subscribe and turn on those notifications so you don't miss the weekly recaps. Now, let's get to the plan. All right, so here's the game plan. It's an if-then scenario. The base case is just choppy, range-bound action ahead of that earnings print. The bull case gets triggered by a strong Nvidia report and a reclaim of SPY 665. And the bear case gets triggered by a weak report and a clean break of that SPY 660 support. All right, first up, the bull thesis. What could actually cause a reversal higher from here? First off, Nvidia beats estimates and gives really strong guidance, basically reaffirming that whole AI thesis. Second, hedge funds are heavily short right now, which provides a ton of fuel for a massive short squeeze into year-end. And finally, the historical data is pretty compelling. After similar breaches of the 50-day moving average, the market has actually been higher 100% of the time 1 month later. Okay, now for the bear thesis, which frankly aligns with the price action we're seeing right now. Look, the bear case is pretty straightforward. Nvidia misses or gives weak guidance. This would validate all that heavy insider selling and basically prove the AI hype was a bit of a bubble. That triggers a break of key support, forcing options dealers to sell futures to hedge their books, and boom, you get that gamma-driven waterfall. So, how could you actually approach this event? This slide shows two very different strategies. On the left, you've got a non-directional straddle on Nvidia itself, which profits from a big move in either direction, but it's exposed to that post-earnings volatility crush, where option prices just collapse after the news is out. On the right, a directional SPY put debit spread. This is basically a defined risk hedge against a market breakdown, a bet that the bear thesis plays out. And since we are talking about options, here's the required risk warning. Options carry risk. Capital is at risk. Losses can exceed premium, and discipline with sizing and stops is critical. This is not a recommendation to trade. Hey, if this morning brief helped you get prepared, like and subscribe, and make sure to turn on those alerts so you don't miss the next one. And our final note, this is not trading advice. It's just a market update to keep you informed. Markets carry risk. Trade your plan, manage your downside, and always verify all data. So I'll leave you with this question. With the market on a knife's edge balancing these clear bearish technicals against a single powerful catalyst, is the volatility we're about to see a final warning sign, or is it the trading opportunity of the quarter? Your preparation will determine the answer.